Hey everyone, welcome back. It's episode 970 of Money Girl. I really appreciate you downloading the show. I'm Laura Adams, an award-winning author, on-camera spokesperson, money speaker, and founder of The Money Stack. That's my Substack newsletter. Free subscribers automatically receive my Money Success Toolkit, which includes the exact templates I use to manage my finances. You can learn more, ask questions, and sign up for The Money Stack for free at lauradadams.com. Or you can leave a voice message with a question or comment by calling 302-364-0308. We love getting your questions, and I'd love to feature your question on Finance Friday. That's our weekly Q&A bonus edition of the show. If you're a homeowner or you want to be a homeowner one day, this show is for you. It is so important to know how a mortgage differs from other types of debt and how to prioritize it within the context of your entire financial life. This podcast will review who should and shouldn't pay off their home loan early. Plus, you'll learn 7 hacks to become mortgage-free if it is wise for your financial situation. So first, let's cover the advantages of paying off a mortgage early. I mean, certainly the primary advantage of paying off a mortgage or any debt ahead of schedule is paying less interest. For example, if you owe $250,000 on a 30-year fixed-rate mortgage at 6.5% interest, your monthly payment is about $1,580. Now, if you keep your home for 30 years, you'll pay approximately $318,000 in interest alone. But let's say you get a $50,000 windfall and you use it to pay down your mortgage in the 4th year of ownership. At that point, you would pay off the loan in 20 years instead of 30. Plus, your total interest will be reduced from $318,000 to $177,000, saving you $141,000 in interest. Not bad, right? While saving interest is terrific, it's important to understand and remember that a mortgage is a relatively inexpensive debt that does come with tax benefits, making it less expensive. Right now, the going rate for a 30-year fixed-rate mortgage is just over 6%. Once you send extra money to a mortgage, it's tied up in your property. So if you unexpectedly, lose your job or you suddenly have a significant expense, you won't be able to get that money back quickly, if at all. Additionally, you may lose the opportunity to invest your extra money for higher returns than your after-tax mortgage interest rate. For instance, investing in a mutual fund in a Roth IRA that earns 7% on average is better than paying down a mortgage that costs 5% after taxes. While getting rid of any debt is ultimately good for your finances, paying it off in the correct order is essential. You want to always consider your mortgage in the context of your entire financial situation. For instance, if you don't have any emergency savings, or you're not regularly investing for retirement, or you've got high interest debt like credit cards, it's never wise to send extra money to your mortgage. I know living mortgage-free may sound good, but the bottom line is that it's not always the best use of your money. You're much better off saving for emergencies, getting rid of higher rate expensive debt, and shoring up your retirement before paying off your home ahead of schedule. However, when your finances are in great shape, paying down your mortgage can be an excellent money move. So I'm going to take you through 7 hacks to reduce your home loan faster again when it is right for you. So number 1 is to make bi-weekly payments. With a bi-weekly mortgage payment schedule, you pay half of your mortgage every other week instead of sending one monthly payment. So what this does is that since there are 52 weeks in a year, this hack allows you to pay the equivalent of 13 monthly payments a year instead of 12. And it works really well if you get paid every other week, so the biweekly loan payments occur close to payday. Let's go back to my example of a 30-year mortgage for $250,000 at 6.5% interest with a monthly payment of $1,580. If you make bi-weekly payments, you'd pay $790 every other week. Sticking to that bi-weekly schedule would cut your interest by just over $75,000, and you'd pay off the loan in 24 years instead of 30. You want to check with your mortgage lender about the best way to make bi-weekly payments so they apply them correctly to your principal and interest. If they hold your funds in an escrow account until your payment due date, that won't reduce your loan balance or cut your interest. Hack number 2 is to make an extra payment annually. If you can't get a mortgage lender to apply bi-weekly payments to your principal as you send them, another hack is to make one extra payment a year that gets fully applied to your balance. For instance, if your mortgage payment is $1,580, save $132 a month in dedicated savings. At the end of the year, you'll have an extra payment to send to your lender. So just divide your mortgage payment by 12 and save that much. So after a year, you've got enough to send that to your lender. Again, make it clear that you want the entire amount applied to your principal balance by entering Apply to Principal in the memo section if you've got a paper check or even in an online payment. Or you can make an extra payment through your mortgage online account, where it may be easier to indicate that you want the extra amount fully applied to your principal balance. Number 3, pay extra each month. If you're determined to pay down your mortgage early, every little bit will help. Instead of saving to make a large additional payment once a year, consider paying extra each month. Let's use the same example, $250,000 mortgage, 30-year fixed rate at 6.5%. If you add an extra $100 to your monthly payment, you'd pay off this loan 5 years earlier and save over $58,000 in interest. Number 4, send any windfalls. While you can pay off your mortgage slowly and steadily by regularly paying the same amount each month, you don't have to be consistent. There's nothing wrong with sending one big windfall when you can. If you get a bonus at work, a tax refund, or an inheritance, put all of it toward your mortgage and then return to making regular payments. You probably won't even miss the money. Number 5, round up your monthly payments. If you don't have much extra money to pay off your mortgage early, an easy hack is to round up your monthly payments. For instance, if your payment is $1,580, why not just pay $1,600? Again, be sure to indicate that the extra should go toward paying down your principal balance. Number 6, determine your target payoff date. If you have a specific date when you want to be mortgage-free, like by your 50th birthday, when your kids are out of the house, or when you retire, figure out how much extra it will take to achieve your goal. Since the math can get a little complicated, you can use an online mortgage calculator such as those at calculator.net or dinkytown.net to crunch the numbers. You want to enter different amounts of extra payments until the final payoff date is close to your target. And 7, eliminate private mortgage insurance or PMI. Lenders charge PMI when you take out a conventional home loan and pay less than 20% down. However, once you pay down your mortgage to 80% of its original value, you can request cancellation of PMI. Getting rid of that premium frees up money that you can send to your mortgage principal instead. To sum up, paying off a mortgage ahead of schedule should be the last financial priority for most people. You should only use these hacks to pay off your home early if your finances are in excellent shape. So that means you have healthy emergency savings equal to at least 3 to 6 months worth of your living expenses. You make regular retirement contributions, such as from 10 to 15% of your gross income, and you have no other debt, such as credit cards or loans that charge higher after-tax interest rates. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast, and we've got a great team working on the show. Steve Rickyberg is our audio engineer. Holly Hutchins is our director of podcast. Morgan Christensen is our advertising operations specialist. Rebecca Sebastian is our marketing and publicity manager. And Nathaniel Hoops is our marketing contractor.